What is going on YouTube? It's Brendan for Market Makers. Guys, I hope you're having a fantastic weekend. Futures are open on SimpleFX. Watching the equities slightly decline here in the after hours. Guys, we got a lot to cover today. Even though the markets are actually closed here in America, the equities markets tomorrow, you'll be seeing some action potentially on futures, but the big volume will kick in Tuesday morning. So stay tuned for that. Guys, a couple of different topics real quick. So, I'm looking at starting a Rumble. I don't know if you guys are familiar with Rumble. It is a competitor to YouTube. It's a free speech platform where you can talk about anything. Joe Rogan famously was offered $100 million to go over there, but he chose Spotify instead. They're talking with some other high-level influencers about potentially opening up over there, like Russell Brand, the British comedian that has 6 million subs. He may be having a Rumble soon. So I'm looking at starting a Rumble for free speech stuff. And because I have a list of things I'm not allowed to talk about with you guys. YouTube emails us a list. And that's why you hear me say words like pandemic or virus. Can't say the other word, right? If I do, I get demonetized or I get suppressed in the algo. Same way you hear me talk about the conflict in Europe. I can't identify the president of that country. It's one of the words I'm not allowed to say. It's a lot of things I'm not allowed to say. So what I'm going to do is upload on YouTube, also upload on Rumble, but I've been thinking about doing like a podcast episode where I might do it once a week, maybe more if it becomes popular. And we just talk about all the different topics related to markets, which include politics, guys. So if you guys think that's something you might be interested in, if you'd be interested in opening a Rumble, it is free. So it functions the same way as YouTube. Let me know in the comments if you want to see that, okay? Because I just like the idea of having a backup. You never know what's going to happen on YouTube with big tech censorship, okay? So I like the idea of having a backup. And so to explain the thumbnail today, let's talk about the thumbnail. Now, I know a lot of you probably think, Brendan's super conservative or whatever. I'm not. I'm very, very libertarian. I think most people that come to the crypto space are very libertarian. We came here because of not having all the regulations, right? We don't want the government's boot on our neck. I'm very libertarian. And, I think you should think about it like this. So the bubble that we are in that has now popped, as you can see on my screen, the bubble that we are in had started way back in .com. You guys have heard me talk about these bubble cycles many, many times, but it started way back in .com. That's when Greenspan came in. That was under Bush. It started back in .com. It progressively got worse with the great financial crisis, and then that was the handover with Obama. And then we had more and more stimulus coming to the marketplace, more and more money printing. All of these things was a big snowball, right? You start with a small snowball at the top of the mountain, you throw it down, and it picks up speed, like in the old Looney Tunes cartoons. It gets bigger and bigger and faster and faster. And, Trump spent too much money too. But I have to hand it to Biden. Because Biden, it took a certain level of incompetence to not understand where we are in the market cycle. I know he doesn't understand. I don't expect him to, okay? He's got too many things on his plate, diaper changes, not knowing where he is, talking, sniffing his granddaughter's hair, whatever he wants to do. He has too many things on his plate, but his economic team is completely incompetent, and you saw this all through last year. This is important, guys. I'm talking about this for the few of you that get triggered when we tie in politics. Politics affect economics, which affect the things that you invest in, okay? So he promoted people that basically have this ideology of modern monetary theory where you can just keep printing money and you won't have inflation. And all through last year, they trotted out Janet Yellen. They trotted out the head of his economic, whatever his name was, James Keenan or something. They trotted all these people out and said inflation's transitory. The Fed itself said inflation's transitory, who of course was reappointed by Biden, right? So inflation was transitory. Biden himself said in December, 7% was peak inflation. No serious economist, this is his words, no serious economist thinks that it's going to go higher, it's going to be permanent. And look where we are now. Okay, so it takes a certain level of economic incompetence, just incompetence in general, to appoint incompetent people to important positions, and B, to have zero idea of what's going on in the world, to the point where we're piling on more debt. more and more debt. Another trillion now if this student loan forgiveness thing gets approved with the anti-inflation bill, which has a tax increase on the middle class. We have now hired under Biden 87,000 more IRS agents, brings up our armed IRS agent total to be larger than the standing active duty military in the UK. That's just our tax collectors, okay? Larger than the active duty military in Israel, larger than the active duty military in the UK. I don't know why I'm slurring my words right now, but that's where we are, guys. And this is the person that's running the country. So when you keep spending money, keep printing money, it's going to force the Fed to have to be more aggressive because inflation will not get under control. As you guys know, all the way back to World War II, 5% inflation or higher has never been conquered without having a recession. Average drawdown in the S&P on my screen, 35% in a recession, and we are trading in a 3 sigma bubble, okay? So now the narrative on CNBC and these other traders and money managers that come on there is a couple different narratives. The new one that I see being spun around is, let's just get the Fed to keep the rates, 3.5%, 4% just for a while and let inflation naturally come down. Naturally come down. How did that work out in the 70s? How'd that work out? You had inflation the entire decade, which is what Powell is definitely afraid of. Okay, he doesn't want to be known as the Arthur Burns of the new generation. That was the 1970s. Inflation won't naturally come down. The prices won't naturally come down. The problem that you have is you printed over 40% of the money supply in 2 years. And actually, I retweeted. If you guys saw my tweet, I retweeted. I think it was Zero Hedge that put it out there, Wall Street Silver. It was an excerpt from Putin's speech back in June, where he was talking about the West, how we have fiat currency. And he gave the U.S. as an example, saying that we printed 38% of the money supply in 2 years, which he said was $5.9 trillion. So it's definitely over 40% now with all these new spending things that have come to light in the last couple of months. So, it's just interesting, guys. And when you look at the bubble cycles in general, what happens in these bubble cycles, over the last 10 years, the S&P on my screen, guys, went up 240% over 10 years, right? That's basically after the great financial crisis, all the stimulus, the TARPs, the QE, but over the last 2 years, it went up 120%. You 4x'd the previous run that took 8 years to go up 120%, you 4x'd it in 2 years. This gives you your bubble. This bubble lines up very similarly to the dot-com bubble. This is where the growth led. The growth led the marketplace, and then the growth was also the first to fall, okay? Look at what's happened to Snap. Look at what's happened to Coinbase, anything in ARK, Zoom. All of these stocks, Peloton, guys, the meme stocks, all of these stocks are already down 50, 60, 70, 80%, just like in .com. Remember, the market broke in March of 2000. That's when you saw Pets.com. That's when you saw Tech Media Telecom, which is 30% of the market, start to fall apart. But the S&P held stronger longer until September, and it started to roll. Why September? I don't know. It was also a Shemitah year. So, this is what's happening now in the marketplace, guys. The stalwarts of the market, the big companies, the Googles, the Amazons, the Teslas, the Apples, they're holding the market up essentially at this level. When they start to give way, all the money's hiding there. When they start to give way is when you're going to see that price declination moving down. Okay, you're going to see that price declination, and that'll happen when they crack. Now, what we have, the reason I want to bring this up, what we have looking at the Russell pattern, looking at the Bitcoin pattern, we know Bitcoin, based on this candlestick pattern, if it holds true, okay? That's the caveat. The candlestick pattern has to hold true, but it's been holding true since November 8th, okay? You look at this, the 11 bars down, 9 bar run up, and then 20 bars between tops. It repeated this 2/3 of the way. It looks very likely it's going to repeat this the third time, the law of 3. This declination in price lands you perfectly at the 1618 at 10,591 on October 31st for that weekly candle. We have the same pattern on the Russell. Now, we know these aren't going to move independently of the markets, right? In other words, the NASDAQ and the S&P aren't going to go up and the Russell and Bitcoin go down. They're going to go down as well. So we want to look and get some projections of where they may go down to. When I averaged out these drops just to save time, guys, this came out to a declination to about 35.93 here on that trend-based fib. So that's about a 16.75% declination. I fully expect that to occur by that time, okay, by October 31st. We don't have a candlestick pattern showing that, but I'm just projecting this based on the other patterns that we have on the other two markets, okay? Now, any one of these, you can have a rebound, right? You see price moves in waves over and over again. So I'm really looking at that October 31st date. I do believe we're going to sweep these lows in all the marketplaces, and the most likely place for a rally as the weekly 200, 233 moves up is going to be a bounce off that weekly 200, 233. If you look at here on the weekly time frame, you just cross back into the bullish territory on the money flow. S&P. So guys, if you do want to trade with us, definitely consider joining our Discord, the join button underneath the video. And if you do want to trade, check out our platforms. And looking at the equities first, we're going to get the Bitcoin and the commodities. So SimpleFX, guys, you get up to a $5,000 instant bonus. You don't earn it. You don't roll it over. You need our link, the tutorial video, also in the video description. It helps support this channel, so I personally would appreciate it. If you are going to trade, at least check out these platforms with our link. People are asking me, hey, I missed your short. Where can I get back into it at? My first response, like I said, would be join our Telegram or join our Discord. But for those of you trading at home or trading in different countries and you don't have the time and or the money potentially to join those services, what I'm looking for, guys, is a rebound, potentially a retest of that 50 daily moving average. Remember, 43% of these indexes are bought and sold based off algorithms. The 50-day is a big algorithm. So if we end up trying to put in some type of bottom here and come back up as this declines, you can look and see if we get that declination. Remember, till October 31st, this is basically the beginning of September. So we have time here. We're going to see a bottom put in at some place, although the bias, having lost the 618 here, the bias is to move to that one fib at 37.57. Okay, so that's something to pay attention to. But you got some demand wicks on these candles. You may get some type of bottom and a retest here of the 50, and I expect it to fail. Okay, I expect it to fail. If it doesn't, it's going to fail up here if the larger moving averages like it did before. But I would expect it to fail on a retest. So that's where I would be looking to potentially trade. Looking down here, you are oversold, hence you are trying to hold this area. So we'll see if that can hold out. Same here, guys. Already did the measurement for you, so you have to watch me do it. But looking at the 618, the average of the declines here, that percentage decline would bring you down to 10,179 by October 31st, which means you'd be losing your 200, 233. And I fully expect the NASDAQ to come down to that at some point on the weekly time frame and get some type of bounce, okay? Some type of rally, some type of bounce. Who knows how big it is? You know, this is a data-driven market. We have the CPI coming out, could be low, could be high. We have, the FOMC meeting, the Fed is going to give another speech again that could rally the market, crash the market. You know, we don't know about these unknowns, but this is just based off the patterns that we do know about, looking to see if we get a bounce down here. And in the meantime, this is a weekly time frame now. You're going to have price moving waves as it descends, okay? Let's look at this on the daily. You can see it on the daily. Here's your 50. Again, I'll be looking at the same thing. If we do end up putting in some type of bottom, this definitely looks like it's moving to the one fib when you look at this. Trading at 12,058. This is only 11,817. Very easy for the NASDAQ to lose a few hundred more points and try to bottom here at this one fib, okay? Get some type of doubled bottom, maybe come back up. The 50 will be rolling over, get that impact again. That is where I'd be looking to potentially short. You are oversold here, but just barely. You're barely oversold here on the daily, so you definitely have some room to come down. As you can see, you can drag this all the way down to that 90-10 level. This is the MFI, the money flow indicator. This is a volume-weighted RSI. RSI just measures price. The MFI includes volume calculations, and this. So I suggest you guys trade with it because it's a fantastic indicator. But if you do join one of our services, you get this indicator for free because this is a custom-designed indicator by Fractal Trade 15 for our room. And let's go ahead and jump over to the Russell. Same exact pattern, guys. You've seen me talk about this before. The Russell, which is currently trading at 1804, looking for this to move down to the 618, 1521 on October 31st before that 9-bar run up, which would end January 2nd, okay? Gives you a trajectory. Right now you are resting on the 200 on the weekly. This is your 300 below you, but gives you this type of, maybe we do hold this as a bottom, come back up and do something like this, right? Slinky our way down here and then run back up, and then this is where the pattern ends, guys. From here it could do this, from here it could do that. I think the bias is definitely to do that, okay? But this is the pattern. So this is what we're looking at on Bitcoin, looking at on the Russell. We'll see if this little bottom can hold for a little pop up. And let's go ahead and look at this on the daily. On the daily, this does look like it's coming down. I did a shorter wave projection based off this double top right here. Gives you the 1618, which measures up with the 1 fib, 1765, 1751. I think you're coming back down to this level. This may be where you try to put in a bottom. And again, you have your 50 right here, okay? Your 50 rolling over. So if it does want to come up and retest, this will be the next opportunity to drop the market. You are definitely oversold here on the Russell. Volume, though, you still have a strong bearish trend, so we'll see how that plays out. Let's jump over to Brother Bitcoin, guys. Brother Bitcoin. So looking at Bitcoin, guys, again, this is the Dante's Descent pattern, the same exact pattern. 11-bar drops, 9-bar run-ups, 20 bars between tops. Again, key takeaways. No swing high was defeated. 48,240, 25,214. This is still early, but if this pattern is to hold true, this will not be defeated. 25,214. And these declination drops get us down to the 1618 at 10,591. And again, this is not a price sensitive pattern. It is a candlestick pattern. So that could be a lower drop or a higher drop, okay? You could land at 15, land at 16, you could land at 3. What we know based on the candlestick pattern is that October 31st, you should make some type of local bottom and then have a 9-bar run up like you've done each and every time after an 11-bar drop, okay? Fantastic how candlestick patterns work. As you can see, you are bearish here on the weekly. You're trying to find support here on the EMA cloud, but you have plenty of room to move down on the weekly time frame. Let's go to the daily. Daily, you know, we went ahead last time we did a video. We did this trend-based fib projection. As you can see, your support level, you are dancing on that 19,554 for support. Let's go ahead and get an upside level here as well in case Bitcoin does want to move up. And we'll do it this way. And if you look at this, guys, I mean, you're stuck between 382s. Let me expand this so you can see this, okay? This is your upside 382. Let's go ahead and color this something different so you can see what I'm talking about. We'll make this one red. And then make this other one green for support. Simple as that. Do green. There we go. You're stuck between 382s. This is your upside projection and your downside projection. This is how tight your range is. So you're between 20,291 and 19,554. Okay, so what are we looking at here? Well, in general, guys, when you're looking to short in a primary downtrend, this is the daily, we're going to look at smaller time frames, you want to hit key resistance before you short. Now, we know that that 25,210 should not be defeated, which happens to be right here, right? So that's right there, that 25,214 should not be defeated. So you're going to look at these levels here, and the 618, and we're on the daily time frame, so it's a powerful time frame, is at 21,965. So if price does make some type of bottom and come up to one of these fib levels, 21,128, which is a 0.5, or 21,965 and starts to fail, you get wicks, you get candles, you start to roll over just like this. You know, this is an area that you can look at, but really, guys, for me, this is going to follow the indices. If the indices hold a bottom, Bitcoin's going to hold a bottom. If they drop out the bottom, if they continue to drop, Bitcoin, even though it's been holding up well, could easily come down another level, okay? That's what you need to be very careful about. We don't have a key resistance level here on the daily. I mean, this is your holy grail trade. If it could ever come up here, but I don't think it's going to, obviously. It would violate the pattern, first of all. But these are going to keep descending to 200, 233, 150, and it will impact them at some point, and that will be a big move down if it fails, which obviously in this cycle, guys, the economic cycle, I mean, everything is just now starting to get bad. You're starting to see it in the numbers. You're starting to see it in the speech on TV. Things are just starting to get bad. It's going to take months and months to unwind. So I think we have a lot of volatility and a lot of downside risk ahead of us, okay? So just be aware of that. looking at Bitcoin on the 8 hour, it's going to be lined up basically the same way. But you can start looking at your long-term moving averages here as well. But let's go ahead and look at the 4 hour. Okay, 4 hour through on our Ichi cloud. You can see Bitcoin's going to have to come to a decision as it starts to approach this cloud. 9th of September, 8th of September. We'll see what this does, but this is going to want to push you down. You see this? You're either going to have to go through the cloud or you're going to get pushed down by the cloud. So you're going to do something like this. You either have to come up or you're going to do something like this and start coming down. Part of Kumo trading, right? Ichi trading with Kumo clouds. So we'll watch this and see how it develops. I use my 5 and 21 volume weighted moving averages. You can see you get buy and sell signals. In a choppy market like this, trading in a Wyckoff trading range, you get a lot of signals and they're not always good, right? Because you got big pump candles and it turns back around and dumps. So just be very well aware of that. You're looking for a breakout or a breakdown, 4 hour time frame on the money flow. You got a double bottom, so you might get a little bit of a move up, but I just don't expect any miracles. You know, again, Tuesday, the market's open. See if they continue to slide, come down to their 1 fib. Maybe Bitcoin can hold this trading range. If it does, and the market's put in a bottom to give us another little spring top back up for another rally, maybe we'll see Bitcoin rally up to a certain level, and then that level is where we can short. When we are looking at the 200, 233 on the 4 hour time frame, they're way up here, guys. 22, I say way up here. It doesn't seem like it's that far, but it's 21, 737, 22, 116. If we get any type of spring, this is exactly where I'm looking to short, okay? Building up some type of top at that level. Let's go to the DXY. DXY is open. You can see we're at 109. I mean, the highest we have been since the dot-com bust. When will the market completely fall apart? That's really hard to say. It got to 121, okay? When equities fell apart, it got to 121 in the dot-com bust. This is 117. 1618. Hard Gann resistance here as well. Could that be where it falls apart? Could be. I mean, it could be before that. But, you know, if you did go past that to the 2618, you're looking at 125. This can take time to get up here. If you just look at this move here, this was August 9th to where you are now. So August 9th, you were trading, let me move this out of the way. August 9th, you were basically trading at like 104.5, and now you're at 109, okay? So it takes time to move, but this, you can clearly see in its trajectory. Remember, Bitcoin and everything made its all-time highs over here. You see this way down here. Equities, Bitcoin made all-time highs when the dollar was down here, and look where it's at now. So this is clearly moving up, okay? This is clearly moving up. As this gains strength, equities will lose value, cryptos will lose value, gold, silver will lose value. Strong dollar hurts everything. Speaking of gold, let's go over here and look at gold. So looking at gold, it's tracking quite beautifully here. You know, we had that top that came in above 2,000, that sharp downtrend to spring back into Wyckoff. You can see our Wyckoff line. Lots of down thrusts here, and then that next move up, right? Got back above 2,000. And then what's happened since then? Complete and utter downtrend. Now, we fell out of Wyckoff. Not only did we fall out of Wyckoff, we actually got our inverse cup. You see that? There's your test. And there you go. You fell out of Wyckoff, and this is where we are right now, guys. So the key number on gold that you boys and girls need to look at home is 1672. You see this number? That's the 1 fib. 1672. Going all the way back to August 2020, you've held this line, okay? If you lose 1672, this is a big liquidation event in gold. Now remember, gold fell 34% in the great financial crisis. And the next level here, the 1618 of strong support, is at 1425. So let's just get a declination of price from this level and see what this would be, okay? So go up here, roughly, this isn't as high as the other peak, but it's close. This would be a 31% down move. It fell 34% in the last crash. That would be a 31% down move. Market moves in patterns, guys. I expect to see acceleration of the dump going through this month into next month, and you're going to have waves up and down. But guys, that's the market we're trading in. So let's see what this is here. It's still about 31%. So that would be a 31% down move. I would be highly inclined to think, as long as the dollar keeps rising, you do have a double bottom type structure here, but let's see if you can get upward momentum. You need the upward momentum. The double bottom doesn't matter unless you go up, right, and break resistance. And then you could also just retrace. But I would highly expect us to get to this number, 1425, 30% down move from the high. Makes sense, because that's what happened happened last time. Gold will be sold off when these banks need to free up cash. All the paper gold will get sold first, and then the physical gold, okay? But this is all about opportunities, guys. All about opportunities and entries. Not everything is bad. Some of you may be watching this and you don't actually care to trade. You just want to see where things bottom. And everybody watching this is going to be able to capitalize when we do have a bottom, okay? Because I'm going to do the best I can to give you that bottom. But we're so early on. And gold will have a spring up when the dollar starts to fall apart. But let's see if we get to this level first, okay? So this is all going to be steps, guys. It's going to be steps that we have to get through. Looking at oil, man, this is probably the number one question, because people know my background with trading oil. I get asked all the time, is oil a good buy? Well, the problem with oil, guys, this is an extremely complex environment. I say this every time. That's your 300, okay? You got to flip that. That's your 200. You got to flip that. So yes, is there a lot of money between here and there? Absolutely. But I personally am not interested in trading oil until it gets back on a bullish trend, back into this Wyckoff trading range, which is above like 94. You're at 88. Right now, your bias is to come down to 80. Okay, based on my TA, your bias is to come down to 80. Again, we do know that winter is going to be sharp and it's going to be an oil supply shortage, but at the same time, you can't factor this in. It's a wild card. Economic global recession, okay? That means less energy is needed on that front. So it's really hard to balance it out. So what you can do is trade the price action. And right now you are below key resistance 300 and 200, okay? So I need to see that broken to come up to get me more bullish on oil. Until that happens, I'm not interested in shorting it either, because it can have these really parabolic moves. But this asset, until it makes some type of bottom, which may be that $80, I mean, that may be something. If we get down to 80 and you start seeing it bob around, make a double bottom here, give us some type of candlestick pattern, see something on Fibonacci or Wyckoff, get our cup, get our breakout, absolutely, I would love to trade it like that, okay? So I'll be looking for that setup. I'll be sharing that information with you guys. Hope you guys enjoyed this video. For all of my American friends, most of you, or if not all of you, are off tomorrow. So guys, have a fantastic long weekend. Everybody else, talk to you next video. Good night and good luck.